Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
How much is that free steak dinner really costing you? Stay tuned to find out.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, five-time author and fiduciary, the money missionary himself, Tony Walker.
Hello and welcome to the Worry-Free Retirement. I am your host for today's show, Tony Walker, and for the next 28 minutes or so, we're going to take you on a journey specifically designed with savers in mind. Well, you may have heard the intro to the show, these steak dinner seminars. And now, first of all, folks, these steak dinner seminars have been around for years. And while there's nothing wrong with steak dinner seminars, I think you have to really think through this a little bit, folks. Here's a visual of maybe you've received one of these invitations. If you're over the age of 50, I guarantee you have, because that's the age when these steak dinner seminars start flying off the shelves in terms of advisors looking for business. Now, why in the world would an advisor spend 30, 40, 50 bucks to invite complete strangers to these dinners? Well, quite frankly, folks, I'm in the financial business. Most of the people are in the financial business hosting these seminars because there is a lot of money to be made in the financial business. So therefore, they can afford to put these on. But there is a cost to consider when you go to a free steak dinner. And that is, anytime you're going to any type of free steak dinner seminar, workshops, even those hosted in universities or in places like what we've hosted them in, we're all after the same thing, folks. All advisors are after the same thing. We are looking for potential new clients to work with. And there's nothing wrong with that. That's called marketing. The problem is, many of you, and you give me this feedback, many of you go to these workshops or dinners because of the free steak. And then you come to me 2 or 3 years later and you throw out maybe the products you've purchased. Sometimes you don't even know what you've bought. And secondly, many of you don't understand the fees associated with the products or services you purchased from the folks offering the steak dinners. So we're going to dive into that. This is going to be a deep, deep dive. And again, back to our intro, the question is, assuming you went to a free steak dinner seminar and ended up buying something from one of those advisors, hosting them, what did it really cost you, not today, but what is it going to cost you over your lifetime? And I think you're going to be astounded by these numbers that we're going to be sharing with you in our next segment. Before we move on, it's going to be important that you understand, last week I know we talked about several books that I recommend. It's going to be very important that you understand something called opportunity cost. And if you'd like to order this book, this is a college textbook by Heyman and Bloom called Opportunity Cost in Finance and Accounting. It's really a very boring read, but it's a very educational read, and it's a read, quite frankly, that most financial advisors don't really explain to people. Either one, because I don't think they really understand opportunity cost, or number two, they don't want you to think through the idea of cost. So what makes the Worry-Free Retirement so different than other types of planning processes out there? The Worry-Free Retirement starts first at the idea of minimizing costs. That's where we always start. And there's basically 4 costs of money that you've got to be consumed with as a saver. Number one, those costs can be fees, and we're going to show you that in a minute. It's actually going to be very entertaining, folks, would be fees. The second cost would be interest. For instance, interest on credit cards or loans of any kind. So interest are a cost that we must be concerned with. Another cost is insurance premiums. Insurance premiums can range from health insurance, life insurance, car or home. It goes on and on and on. And the problem with insurance premiums, obviously, if you're paying a lot out in insurance premiums, depending on the policy, if you never collect, again, that's a cost. And then finally, the cost we went through, the fourth cost, is taxes. Taxes can be in the form of local taxes, property taxes, state income taxes, federal taxes, alternative minimum tax. I mean, it goes on and on and on. So understanding these 4 costs of money, and in the Worry-Free Retirement, our goal is to try to minimize those costs. What we run into is this principle of opportunity costs. So what does that really mean, Tony? Opportunity cost simply means if we recapture a dollar of cost or minimize that cost, that means that we get the dollar, we get to keep the dollar and the use of the dollar, but also we get to make the interest on that dollar. Now, if you're reading the book, Opportunity Cost in Accounting and Finance, the number you should use for the opportunity cost factor is your highest net best rate of return. So in a minute, we're going to use 5% in our example because that's what they suggest you use. It could be 3, 8, it doesn't matter, because what we're going to see is we're going to compare our fee arrangement with our new Schwab platform with most of the fees I'm seeing charged by many of these advisors out there who are offering these free steak dinners. And that's where we're going to get to the true cost of that free steak dinner. You need to understand what's involved. Now let's use this example in a minute. When we come back, I'm going to show you a neat graphic. And in this graphic, we're going to take one free steak dinner that you respond to, one of these dinner seminars, and then we're going to imagine that what happens over the next 30 years, and we're going to provide a factor, and I'm going to change this up a little bit. Rather than talking about just fees and dollars, which I'll get into, I'm going to translate that into how many steak dinners that will cost you over your lifetime because of these high fees that I keep seeing. So you stay tuned. When I get back, I'm going to get the whiteboard out, and we're going to go through a very methodical process of understanding fees, what that translates into how many steaks that's going to cost you over your lifetime if you go with some of these high fee structures, and then finally how you can better understand opportunity costs, not only to save you money for fees, but put more money in your pocket throughout your retirement. You're watching the Worry-Free Retirement. I'm Tony Walker. Let me get the whiteboard out. I'll be right back.
I want to retire and do the things that I enjoy, but I don't want to run out of money either. I've talked to some advisors, but I don't feel like I have a game plan. I wish there was someone out there that specialized in making this simple.
Over the past 30 years, I've helped thousands of people be worry-free by creating a financial game plan that provides mailbox money for life. I'm Tony Walker, and I can help you too.
Log on to TonyWalkerFinancial.com.
Worried about running out of money in retirement? For a limited time, 5-time author and retirement specialist Tony Walker is making available his latest book, Mailbox Money for Life. For your free copy, simply log on to TonyWalkerFinancial.com.
And now it's time for Tony in the Trenches.
Welcome back to the Worry-Free Retirement. Our Tony in the Trenches question comes from Phil in Shelbyville, Kentucky. He says, Tony, I know that you are a big fan of annuities, and particularly should I put an annuity inside my IRA since the IRA is already pre-tax and an annuity is tax deferred? Basically, he's saying, does that make sense? Well, Phil, that's a really good question, and actually there's a lot of misunderstanding on this. First of all, if you purchase a regular annuity, it's tax deferred. That means whether you buy it through an IRA or just buy it with after-tax dollars, the interest is tax deferred until you use it. Now sometimes, and it's funny you mentioned this, Phil, there's an article that just came out in Investment News, and this is really interesting. And Andrew Slotman in this particular article, this is in November 6th edition of Investment News. He's president of Public Investors Arbitration Bar Association, so I guess he's an attorney, said individuals should almost never, remember, a couple weeks ago we had the never ever crowd, here you go, should almost never put a tax-deferred savings investment like an annuity into a tax-deferred savings program. He goes on to say these are illiquid, high cost, high fees. This, folks, that doesn't even make sense. That has nothing to do with anything in terms of the tax issues. This is what we were talking about with the four cost of money. The reason you might want to consider, which we do them a lot, you might want to consider putting your 401k or IRA or any other qualified account into an annuity is not because of the tax issues. It's irrelevant. What you want to use the annuity for is what we call mailbox money. Incidentally, we still have the mailbox money booklet, but if you'd like to order that, you can still find it on the website and the annuity decision guide. Try to learn the truth about how these products are used, folks. You've got to be careful reading blanket statement articles that sometimes don't pertain to the use and the proper use of the annuity. Remember, The annuity is a piece of the puzzle, not the entire puzzle, but you also have to understand how they work within the planning process. Just log on to TonyWalkerFinancial.com if we can get you either of those booklets. All right, going to have some fun here. We've been talking about these free steak dinner seminars, which on the surface, folks, nothing wrong with them. They're marketing tools to get you there to hear about products and pitches and all that. There's nothing wrong with that at all. I'm not saying that. But the question is, you're enticed to go to these dinners because of the steak. Obviously, it's not the information. You can get the information anywhere. You can Google most of that stuff and find out whatever they're advertising. But basically, the steak is drawing you there. I get it. It's $35 in our example we're going to use you. But my question is, assuming you go to a steak dinner and assuming you just kind of blindly then throw your money at the advisor hosting it, and again, we're not making a blanket statement. I don't know what all of these advisors charge, but recently somebody came to me with the fees that a particular advisor that hosts these is charging. And it's pretty high. It's 1.75% for their managed platform. So I kidded with the person. I said, I wonder what that translates into steaks that it's going to cost you for the rest of your life. And they said, what do you mean? I said, that's a high fee. If we lowered those fees, right, here's opportunity cost. Instead of paying this advisor 1.75% per year for the next 30 years, how many steak dinners would that cost you? And they said, never thought about that. And I said, well, I have. So we're going to do the calculation. And with the help of Heather back in the office, she ran these numbers for me. I'm going to show you that. By the way, we will be happy to offer you, when you see this, you're probably going to take advantage of this, a free fee analysis. It's very simple to do. All you do is go to the website, and then you can click on that and have a fillable confidential form where we can do a free fee analysis of your current brokerage statements. This is going to be really good stuff, and possibly, as you're going to see could not only save you thousands of dollars over your lifetime, but potentially hundreds of thousands of dollars. Let me repeat that. The fee savings we could implore to you, depending on your current fee situation, over your lifetime, could save you literally hundreds of thousands of dollars. And our point is, that's a lot of steaks it's costing you folks. So this is really important. So what I'm going to do, I'm going to use my cheat notes, and we're going to go over on the whiteboard here. Incidentally, we're getting a lot of feedback from this whiteboard, and over the last couple episodes, several people have mentioned to me, Tony, we love the whiteboard, and if you could go deeper, deeper, deeper into that whiteboard and help explain how this affects me and my friends and my colleagues. So we're trying to do a better job of that. So you have any suggestions for the shows, things that we can cover for you, if we need to take a deeper dive into maybe a subject matter, please go to TonyWalkerFinancial.com and we'll be happy to keep your feedback in mind. All right, America's favorite financial sidekick is going to follow along. So here's what we're going to do. We're going to use person A, all right? Person A, and this is going to be the steak dinner, okay? This is the steak dinner they've attended, person A, and the advisor, all right, fees 1.75%. Okay, that's what this particular advisor charges. Advisor fees range all over the place. I've seen them as high as 2.5. I've seen them much lower. So we're just giving you an example and a snapshot, okay? So person A goes to a steak dinner seminar, and they might not even know the fees. Sometimes they don't talk about fees at these things apparently, but basically if you decide to do business with this advisor, in this example, this advisor charges 1.75. We can run the numbers for any amount. This is why you need to do the free fee analysis, folks. All these fees will be different, and there's even fees usually on top of this that most people don't know. We'll look into those, make sure we get all the fees for you so you can examine it properly. And then person B, okay, come over here. Person B, and I'll just put TWF. They go with Tony Walker Financial. They skip the steak dinner and they come right to us for the fee analysis. Our flat fee is 0.6%, 0.6%. So we have 1.75 versus 0.6%. As you can already see, that's a big difference. But a lot of people maybe are not really good at math. They don't know how to quantify this. They don't understand opportunity costs, and they would say, okay, Tony, how many steak dinners is that? Well, we're going to show you a powerful graphic here, and then I'll back this up with the numbers. So let's take a look at this graphic we've created. So in this example, we have one free steak dinner, all right? And it equals, we're going to add this up, by the time you multiply this out and you use just the fee savings, we're not even going to get into opportunity cost, I'll show you that. This means that that one free steak dinner, if you go with a person charging 1.75%, assuming you gave that person $250,000, and assuming on average over the next 30 years, that advisor made you 5% a year, that's going to cost you in fees $216,780. All right? Now, that same $250,000 using the same exact numbers, 5%, but let's say that it was invested with us and we charge 0.6%, our fees over the 30-year period would be $89,975. Now, how many steak dinners did it cost you over the 30 years? How much did that one free steak dinner cost you by going with the higher fee platform? It cost you $126,805, which at $35 a pop, that means it cost you $3,623 steaks out of your pocket. Folks, that's a lot of steaks. So let's look at these numbers and go over them in detail a little bit. So what you have to do, and I'm just going to use the first line to show you how this works, and then I'm going to explain opportunity costs, because it's really worse than that. We're just talking about the cost of the fees in terms of the steaks that's going to cost you over 30 years. But how much wealth is actually taken from you by having to be paying these high fees? So let's go with the first one on the 1.75, and let's do 1 year calculation so you can kind of see this. So you take the $250,000, that's how much you turned over to the advisor. The rate of return is 5%, we're assuming. So the advisor makes you 5%. You know, on average, that'd be a good rate of return. I would take that over the long term. However, they have to multiply 1.75%, which is a fee of $4,375. Okay? So that's the fee that has to be deducted out of that. So let's compare that now to our fee. Better draw a line here, Aaron, just to separate those. All right? Now we're going to assume, again, that our portfolio makes 5%. Incidentally, folks, we have no minimums. We use Charles Schwab as our custodian. I make all the investment decisions. We have no minimum account sizes. And it's the same flat 0.6% whether you have $10,000 or $1 million, all right? So this is a really, really good platform, and it's a great way for savers to invest small amounts of money. You know, most people charge a minimum of $50,000 to even open an account. We'll open them for as little as $1,000. Great way to open up accounts for grandkids, kids. Maybe you've got a small rollover. Maybe you want to start a Roth. We can do all that with our Charles Schwab platform. We multiply that by 0.6%. So our fee is $1,500, okay? Look at the difference just in the first year. So what happens, folks, opportunity cost says you can't stop there. I'm going to show you this in a minute, because really if the advisor deducts $4,375 out of there in that year, that's 5% you're going to lose on that amount, right? Think about that. Aaron, are you following this? Yeah, if you have to take out $4,375, that money is gone forever, and that means you lose the 5% on that money. And I'm going to fast forward here in a minute to show you how high these fees get versus $1,500. So let's go down here, Aaron. We're going to go down to the 30th year so you can kind of get a feel for this. So the 30th, at the end of the 29th year, I guess it would be, yeah, you're at $834,000. The fee is now up to $11,061. So folks, that doesn't sound like a lot on $834, but what if the account went down? You've still got a fee attached. And this is why these fees get out of control. So if we total this up, let's just kind of see what happens here. With opportunity cost, okay, because remember, we're also now going to bring in this concept of all of this money is losing interest, okay? The prior slide we showed you with the stakes, that's just the fees themselves, but what if the fees are gone and we lose interest on the fees, right? You don't have that money. We have at the end of 30 years, our balance over here in our pocket is around $52,000, all right? So on that original $250,000, if it made 5% every year from now on, the fees are compounding, meaning they're getting larger and larger and larger. Remember, as the account goes up, the fees go up. And there's no risk to the advisors, such as myself, because we get paid regardless. Again, that money is going to have to come out of there whether it goes up or down. So that's a problem, and that fee is way too high, folks. Now, if we fast forward and we say, okay, Tony, let's say we went with you under the same scenario, but remember, we're charging 0.6%. We're going to fast forward down to the 30th year, and what would we have total in your account? It would be, and this is a big number, folks, it would be right at $909,000. So with opportunity cost, what it's saying is, let's go over these because this is very, very powerful. Person A invests $250,000. The fee charged is 1.75% a year. And again, there's probably other fees on top of that. We can find this out with our free fee analysis. You need to take advantage of this, folks. On the other hand, our new platform charges 0.6%. So if you go out 30 years, okay, this is an accurate calculation. Person A would have in their pocket, after all the fees, after all the opportunity costs, $652,000. Person B with us, under the same scenario, would have $909,000. That's a difference of how many steak dinners? So that's a difference of 7,349 steak dinners. That's how much it's really costing you, folks. So if you're sitting there saying, Tony, I didn't realize these fees had such an impact. In fact, if you're honest with yourself, you probably don't even know what the fees are because, again, you have the fee of the advisor and then you have the fee of the middleman. Even in our platform with Charles Schwab, we use a lot of exchange-traded funds, very low cost. When I'm kind of doing a search for various funds I want to use in our portfolios, I'm making sure that all the funds I'm selecting have low fees because we don't want to layer on top of these fees, which we have to charge and this advisor has to charge, more and more fees. So in our fee analysis, again, if you want to take advantage of that, just go to TonyWalkerFinancial.com. And again, you're going to click there, not for a free steak dinner, but we're going to try to figure out how many steaks we're going to save you and put money in your pocket with our free fee analysis. Take advantage of this. Or if you'd like to meet with me in person at either our Bowling Green or Louisville offices, I'll be happy to go through all of those statements with you. We do need to see the full brokerage statements, though, that you have, 401k statements, whatever you've got, so we can do a proper analysis. So take advantage of that, TonyWalkerFinancial.com. Scroll down to the free fee analysis, and we'll get started on that right away. Well, what does the Bible have to say about cost and fees and being wise with our money? We're going to come back, in a great little devotional that I use a lot is Charles Spurgeon's Morning and Evening. But I've quoted this book before. This is called Spurgeon's Practical Wisdom Guide. This is a great book to get. If you're not into reading heavy-duty scripture, but you like scripture to provide practical bits of wisdom, great, great book to order for yourself and maybe even a gift for others. It's a classic. I'm going to come back and Spurgeon's going to teach us a little bit about being wise with our money and the idea of avoiding unnecessary costs. But first, I got to get me a cup of coffee. I'll be right back.
Worried about running out of money in retirement? For a limited time, five-time author and retirement specialist Tony Walker is making available his latest book, Mailbox Money for Life. For your free copy, simply log on to TonyWalkerFinancial.com.
Did you realize that the range of taxes on your Social Security income can be anywhere from 0 to 85%? Whether you're already retired or nearing retirement, you need a game plan to be sure you're getting the most of your Social Security income and any other retirement assets. I'm Tony Walker, and for the past 30 years I've been helping savers use, enjoy, and protect more of their hard-earned money. To schedule a free, no obligation to meet with me personally, simply log on to TonyWalkerFinancial.com. Oh yeah, good cup of coffee, and I hope you're enjoying today's program. I hope this understanding of fees, that's one of the four costs of money, these fees that you maybe unbeknownst to you are even paying, is being of help here to try to put more money in your pocket. Now, you might say, Tony, you always cover that little segment at the end about the Bible and what it has to say about money. Why do you do that? Because quite frankly, not only does the Bible have so much wisdom in it, but obviously if you're a follower of Christ, such as me, you want to do your best to take care of what's been given to you. So it's not that we shouldn't pay fees to other people. We need help. But gosh, if you can save literally hundreds of thousands of dollars, that's just stewardship, folks. That's a basic principle. Now, into this whole thing, they didn't have fees and money managed accounts back in Spurgeon's day, but it doesn't matter because what Spurgeon is getting ready to talk about in his book, I love this book called Spurgeon's Practical Wisdom. Again, Charles Spurgeon, I'm always quoting him from his morning and evening devotional. Great, great author, great theologian, great preacher in his day. Just some really great words of wisdom in this book. Again, I encourage you to purchase this book. Even if you don't really like reading a lot of scripture, this is a great book for yourself, a gift for some of your friends. It's just a great, great read and some very common sense stuff. So let's see what Spurgeon says here about learning about things. See, you're watching this show to learn. You go to seminars hopefully to learn. And in our case, we're trying to learn about money and how to take care and minimize the unnecessary costs that many of you are paying. Well, he talks about the idea of learning things, listen closely, but forgetting the lesson of common sense. Spurgeon describes a farmer who doesn't understand the issue of cost yet in his book, and while the farmer tries to study more and more, trying to learn more, he misses the mark on common sense. Spurgeon says of such activity that it reminds him of a blind man riding a blind horse who rode out into the middle of a dark night, and the more he tried to keep out of the ditches, the more he fell into it. Sound familiar? Sound like maybe you and your money? Seems like the harder you try, the worse it gets. Maybe you feel like you've been going to all these dinner seminars because you're trying to learn. That's all right. Maybe you're on the internet Googling and searching. You're ordering booklets. That's okay too. But you might be feeling like, Tony, the harder and harder I try, it feels like the blind leading the blind. It feels like I'm in a ditch. I need help. You know, I can feel the same way sometimes. I have to learn a lot in my business. I've done this for 33 years. But also, you must brand that. There must be a flavor of common sense. That's why we are harping on these fees, folks. It makes no sense to pay these huge fees for managed accounts, especially when there's risk entailed. Why wouldn't you want to lower those costs and put more money in your pocket? That gives you the feeling of being in control, and that should just be common sense. So let me make this offer to you. Whether you have a brokerage account, a 401k, why don't you take advantage of our free fee analysis? Let me show you how to do this. It's a common sense approach to saving more money. You just simply go to TonyWalkerFinancial.com. Now, when you get on the website there, you can do one of two things. If you want to meet with me in person to discuss your situation, you're going to click on the Let's Get Started button, and we'll make that happen at either our Bowling Green or Louisville office. Now, on the other hand, if you say, Tony, I just want to go through this free fee analysis. I want to see what the heck's going on with my accounts. Click there, and that'll take you to a form filled where we can get that information, and again, at no cost or obligation, it share with you how much your current broker, your current Wall Street folk, your 401k, whatever it is, variable annuity, those are expensive. We can show you what the fees are and then show you how the worry-free retirement might be a better solution for you and your future. Take advantage of that now at TonyWalkerFinancial.com. Well, in the meantime, I hope you've enjoyed today's program. I've enjoyed being with you. You remember, between now and next week, if all else fails, you be worry-free. Make it a good one.
Thank you for watching the Worry-Free Retirement with Tony Walker. If you need a safe and simple game plan for your retirement, log on to TonyWalkerFinancial.com and schedule a free, no-obligation meeting with Tony.